The most hyped governance fight in Bitcoin's recent history got its vote this weekend. The result: 2 blocks in 8 hours. While the fork was dying on chain, the biggest asset managers on the planet quietly bought over $850 million of Bitcoin. One of those two things moved the market. Guess which? Quick table stakes. BIP 1, 10's mandatory signaling window opened Sunday afternoon at block 961,632. To activate, the proposal needs 55% of block's signaling support. As of this morning, it has roughly 2.5%. The breakaway chain backing it produced 2 blocks in about its first 8 hours, and block times there are running hours long. Bitcoin itself trades near 64,800, down small, and for macro reasons, not fork reasons. Here's the shape of it. First, the vote itself. Months of campaigning, threads, podcasts, and pressure ended in a signaling rate that rounds to a rounding error, 2.5% against a 55% threshold. No major mining pool backs it. Michael Saylor called it, already failed before the window even opened. The lock-in checkpoint arrives at block 963,648, roughly 2 weeks out, but that is a formality now. Hash power voted, and it voted by simply continuing to mine the main chain. Second, the money that did not care. Spot Bitcoin ETFs just posted 5 straight sessions of inflows totaling $853.5 million. BlackRock's IBIT took $693.7 million of that 81% of the whole flow. Add Ether funds, and combined crypto ETF inflows hit $1.1 billion last week, the strongest since April. 5 sessions. The same 5 sessions, the fork campaign was reaching its climax. The largest, most risk-managed capital in the market looked at the scariest governance event of the year and did not price it for a single day. Third, why the price dipped anyway. Bitcoin slipped under 65,000 this weekend, and the culprit was Friday's jobs shock. Payrolls down 23,000 against an expected gain of 80. Bitcoin is trading like a macro asset reacting to Fed odds, not like a network at war with itself. Sentiment sits near neutral, around 46 on the fear and greed index. That is the tell. The market has already filed the fork under resolved. Watch Wednesday though. July's consumer price data prints at 8:30 Eastern, and the last 2 big macro surprises moved Bitcoin more in an hour than the entire fork campaign managed in a month. The next real risk event on Bitcoin's calendar is a government spreadsheet, not a protocol vote. The experiment mattered, though. For years, the open question was, what happens if a loud minority tries to force a rule change against the economic majority? Now you have a live answer with a body count of 2 blocks. Here is what this means for your money. Governance risk was one of the last institutional objections to Bitcoin. Not volatility, not regulation, the quiet fear that some faction could change the rules underneath you. This weekend ran that exact stress test in production. A fork with maximum publicity and minimum hash power could not slow the asset for even 1 session, and the deepest pockets in the market kept accumulating straight through it. Picture it like a shareholder revolt where the rebels own 2% and the annual meeting simply proceeds. The vote happened. The company did not notice. That is the same choke point logic running through today's other lanes. Oil is priced by whoever holds the Strait. Intelligence is priced by whoever holds the GPS. Bitcoin is governed by whoever holds the hash power and the coins, not by whoever holds the microphone. Paper narratives lose to physical scarcity every time the two collide. Not advice, as always. But the checkpoint block in 2 weeks is now a scheduled non-event, and scheduled non-events are where nervous money tends to get shaken out by headlines that no longer matter. So, the question. If 2.5% with a megaphone cannot move Bitcoin, who actually controls it? That one is deep enough that we are giving it a full video of its own, coming on this channel this week. Drop your answer in the comments. The miners, the funds, the coders, or nobody. Blue pill. The system worked. Move on. Forks fail, number recovers, BlackRock buys the dip for you. Comfortable, and this weekend it was completely correct. Red pill. Notice who absorbed the event. 81% of last week's flow went through one issuer. The fork proved no faction can capture Bitcoin's rules. The flow data asks whether concentration can capture its market instead. Harder question, worth sitting with. Either way, you watched decentralization pass a live fire test. The timeline keeps moving. We will see you in the next one.